Hi there, this is Tantian. Today we're talking about one airline company that have seen its stock price move higher due to the recovery of the airline industry. The airline industry is able to recover due to the rolling out of vaccines and steps made by the airline companies to combat the spread of the virus on board the planes. Hence, due to the recovery of the airline industry, many investors are extremely happy and decided to purchase shares in the industry. The company that I'm talking about is United Airlines. So in today's video, we'll be talking about how United Airlines plan to compete post this pandemic. Before you continue, please smash the like button, and if you like to see more such videos, please subscribe to this channel. Firstly, we'll be talking about the business model of the company. United Airlines is a major American airline company headquartered in Chicago. United operates a large domestic and international route network spanning cities large and small across the US and all 6 continents. Measured by fleet size and number of routes, it is the 3rd largest airline in the world. United has 8 hubs, with Chicago being its largest in terms of passenger carried and the number of departures. Regional service is operated by independent carriers under the brand name United Express. United was established by the amalgamation of several airlines in the late 1920s. The oldest of these being Vanny Airlines, which was founded in 1926. Secondly, we're talking about how the company plans to be environmentally sustainable. United Airlines said that it has partnered with global firms including Nike and Siemens in an Eco Skies Alliance to finance use this year of about 3.4 million gallons of low carbon sustainable aviation fuel derived from the trash. Though tiny compared to its 4.3 billion gallons of jet fuel that United consumed in 2019 before the start of the pandemic, the amount tripled the roughly 1 million gallons of sustainable fuel it has used every year since 2016. Airlines have used sustainable fuel since 2008 as part of efforts to reduce outright emissions, but so far, it represents barely 1% of the fuel used worldwide. So what are the partners that want to deal with United Airlines? United partnered with companies like Nike, Palantir, Siemens, and Japan's Decade Pharmaceutical. The airline industry has focused more broadly on the purchase of carbon offsets to reduce the environmental impact of flying, pending the arrival of new technology to make the sector goal of halving net emission by 2050. Environmental critics say offsets do not directly address climate goals and mask the problem of ongoing jet emission. While using waste avoids taking land from food production, environmental groups like Transport and Environment say such supplies are limited and face competition from other sectors. Finally, we'll be looking at the first quarter of 2021 of the company. United Airlines reported its 5th consecutive quarterly loss, though travel demand has recently improved as COVID-19 vaccination ramp up and government loosened travel restrictions. The company posted a $1.36 billion net loss for the first quarter of 2021 on $3.22 billion in revenue, which fell nearly 60% from the close to $8 billion in sales it has generated in the first quarter of 2020. United per share loss on an adjusted basis came in at $7.50 compared with the $7.08 per share loss analysts expected. The Chicago-based airline said it would likely be able to return to positive adjusted earnings before interest, tax, depreciation, and amortization, or EBITDA, even if business and international travel demands only get back to around 65% of 2019 level. United said it expects its second quarter capacity to be down 45% from the same period in 2019, compared with a 54% decline in the first quarter from the same period 2 years ago. It expects revenue per seat mile, a measure of how airlines are generating revenue compared with its capacity, to fall 20% in second quarter from 2019. So how does the United CEO feel about the recent earnings report released by the company? CEO Scott Kirby said long-haul international and corporate travel demand is down about 80% compared with 2019 levels, depriving the carrier of high-paying customers it relied on before the crisis. United Airlines CEO announced that new flights to countries such as Greece, Iceland, and Croatia have started to open their borders. Furthermore, he also knows that demand is high for these flights. The State Department, however, still recommends travelers reconsider trips abroad. It said that it will increase do not travel advisories to 80% of the world countries, citing that the COVID-19 pandemic presents an unprecedented risk to travelers. Due to this news, the stock fell more than 8%. Domestic leisure travel bookings to popular vaccination destinations like beaches have surpassed 2019 level, Kirby said. Vaccinators flying within the US have led the recovery in travel as more people get vaccinated, government loosening travel restrictions, and travel restrictions reopening. But companies still haven't put many of their employees back on the road, and international travel bans or quarantine requirements continue to keep many travelers close to home. Given the impact of the pandemic last year, these airline companies have to cut jobs to keep the companies alive. American Airlines plans to resume hiring pilots this fall, the carrier told aviators, as a rebound in demand prompts airlines to rethink their future staffing. The COVID-19 pandemic derailed airline hiring plans in March of last year as carriers scrambled to reduce their headcounts to cut costs when travel demand plunged. Bookings has since recovered, led by vaccinators flying within the US, airlines have recently reported. United Airlines also plans to restart pilot hiring next month, while low-cost carrier Spirit Airlines begin training for new pilots in March. JetBlue Airlines has also made plans to start hiring pilots later this year. Business and long-haul international demands remains weak as travel restrictions persist and large network carriers continue to lose money. United reported a $1.4 billion first quarter loss, while Delta Airlines said it lost close to $1.2 billion in the first 3 months of this year. In conclusion, United Airlines have been increasing in value as many investors feel that these airline companies have more gross profit this year compared to 2020. Given that the airline companies performed extremely badly in 2020, there will be a higher growth as compared to growth companies that benefit in the year. Therefore, many hedge fund managers sold their growth stocks and moved into these reopening stocks. As this is one of the reopening stocks, there's a rise in the stock price in 2021. Given that this is the current trend in the stock market, there isn't anything that could pull down its share price. With that, thank you for a nice day. Goodbye.